All information on this channel is for educational purposes only and not intended as financial advice. So as we move on to the next part of the checklist, the lagging span, many cloud traders don't even pay attention to the lagging span or pay attention to it very little. I would probably put myself in that category until very recently when I started paying attention to it more. So essentially, just like everything on the Ichimoku cloud checklist, the whole system, it's all about checks and balances. It's all about getting in at the right time, not too soon, not too early. Yeah, you might miss 10 to 20% of the rally, but you'll be certain to a high probability the trade is going to go in the direction you want it to go based on the signals. So all the lagging span is the current price candle close, just price candle close rather, 30 periods back. So you can see on this candle close, this was the lagging span. So you always want to look for the candle bodies, not the wicks, okay? So as part of the entry checklist, you want the lagging span to be above the cloud if you're in a bullish trend. You want the lagging span to be above price if you're in a bullish trend. So you can see here we had a Kumo twist, something I haven't talked about yet. Price went through the Kumo twist, that's great. You have a Kumo breakout technically, which says you should be thinking about entering along here, okay? Now, according to the checklist, the lagging span, you can see the lagging span is above price, which is half the battle. It's not above the cloud itself. Sometimes the lagging span doesn't necessarily jump up above the cloud, like up here, for instance. It sort of just makes it through the cloud as the resistance like burns off, or however you want to think of it. So what I'm getting at is the entry here is not as good as the entry here. Why? Because the lagging span isn't above the cloud yet. So you can see we had a Kumo entry, which is fine. Price position relative to the cloud, bullish. We also don't have a bullish cloud, so that's another reason not to take the trade here, even though it looks good. We do have the TK cross here, and again, lagging span wasn't above the cloud. So if you're following the checklist strictly, you stay out completely until this candle right here. Why? Price is above the cloud. And even then, I don't think cloud was bullish yet. Let's just count it here. Just measuring 30. Yeah, so cloud wasn't bullish. Yeah, so somewhere in here. I'm just counting 30. So really all cylinders weren't go until this candle here. Meaning this entire checklist was a bullish picture. So you can see the earlier your entry based on the checklist, perhaps the less probable it just goes on, you know, forever, or however you want to think of that. But again, lagging span was above cloud, above price here. Cloud wasn't yet bullish, but we did get the twist bullish on this candle. So at this point, that's when the cloud says you should be long. And you can see how many days that was. Almost 46 days, okay? You're just doing nothing, absolutely nothing. And at least on the daily time frame on this exchange. So you can see that you're somewhat rewarded for that, because most of this is largely sideways chop on a high time frame. And there's all these like, I call them like 50-50 candles, where all of a sudden stuff happens. Certainly when you're above the cloud, you're expecting price to go up. When you're below the cloud, you're expecting price to go down. But it's much harder to gauge if you're in a high leverage position what you should be doing until everything is a go. And one other thing you can use for the lagging span is horizontal lines. So you can just pick, you know, a level. And if you're bad at support resistance, for instance, find a level where it sort of pauses for a second. You can see that that is the support resistance line. So up in here, we have support resistance as well, just based on candle closes. Then one last thing about lagging span, it'll be both the earliest and latest signal that you should be in or out of a trade. So whether or not that's valuable at any level, I don't really know, but it's something you can pay attention to. For instance, when we were here, as soon as lagging span goes into price, all it says is 30, like, you know, a month ago, because if there's 30 days in a month ago, price was here at the same spot. That generally tells you that there's no trend, or it's trendless, it's directionless, it's consolidating. So whether or not you want to be in a trade during consolidation or sideways non-action, certainly up to you, but the cloud is saying there isn't anything to trade for the most part here, because we are already we are in the price 30 periods ago, the same price. Okay, just based on what I'm looking at the moment, this zone here, you can see lagging span went back into price. So even though the first 3 checks on the checklist are go, the 4th one wasn't. So that's your earliest sign that you should be in or out of a trade. And again, this went way north, but you can see once lagging span clears price, there's your signal. So cloud isn't necessarily telling you to get in until maybe this candle close or this candle open, something like that. That's pretty much the lagging span. Not too valuable by itself, but relative to price and cloud, it's extremely valuable in making you wait and be patient for entries.